Hey everybody, welcome to the Portico Podcast. This is Mike Casey, the founder of Portico Advisors LLC. In today's episode, I speak with Jake Cusack, co-founder and managing partner of the CrossBoundary Group, a firm that unlocks private capital for sustainable growth and strong returns in underserved markets. I first reached out to Jake about 10 years ago after he and one of his co-founders published a study on entrepreneurship and private sector development in Afghanistan. That initial contact kicked off a series of conversations on how to harness markets and mobilize private capital in order to build businesses in frontier and fragile markets, which is the overarching topic of this episode. In today's conversation, Jake and I discuss his journey to co-founding CrossBoundary with a couple classmates from Harvard, why investment is a better tool for development than the provision of grants, the critical role that investment facilitation plays in creating investable pipeline, the rationale for CrossBoundary's expansion from an advisory firm to a group that also manages investments, the suitability of the traditional private equity fund model in frontier markets, recruitment and how to inculcate a shared culture across a globally dispersed footprint, CrossBoundary's recent initiative to open source its approach to project financing mini-grids, and much, much more. There are loads of links in the show notes that will take you to the articles, books, and reports discussed in the episode, as well as other resources of interest. These include CrossBoundary's research studies with IFC on private equity in fragile and conflict-affected states in sub-Saharan Africa, the recent report on scaling up investment in Africa in the COVID-19 era with the Tony Blair Institute for Global Change, and many others. If you're interested in their open source initiative for mini-grids, the team will be sharing term sheets for the project finance contracts, as well as a template model on the 15th of February. So take a look and take action if this is in your area of interest. This is a great companion to my interview with Roger Leeds in episode 2 on the topic of private equity and development. So if you missed that interview, I invite you to visit the archive and give it a listen. And if you're feeling motivated after listening to Jake, then navigate to crossboundary.com/careers to peruse their job openings. I hope you enjoy the conversation. Jake, welcome to the Portico Podcast.
Thanks for having me, Mike. Great to be here.
I thought we could start with you giving listeners a bit of background on yourself. So what prompted you to head to HBS and the Kennedy School? As I think about it, I wonder, was there a moment when you had an epiphany in the deserts of Anbar province or something like that, where you were like, I see the future, and this is what it's going to be?
Yeah. I don't know if it was quite that singular of an epiphany, but yeah. So, the quick life story is I grew up in Michigan. I went to Notre Dame. I joined the Marine Corps. I served as an infantry and intelligence officer in Iraq. I did 2 tours between 2005 to 2008, and really took away a lot of learnings from that experience, but also took away this interest of kind of wanting to work in conflict zones in a different way. In my capacity there, I'd been a sniper platoon commander and intelligence officer. So very much, focused on being the stick, so to speak, in terms of, looking for high value targets and sort of rooting out some of the elements of the insurgency there. And I was interested to sort of work on the flip side of, what are the positive rays of hope in a place like Iraq? What are the tools by which you can show a pathway to a more prosperous, stable future for people? And so, had this interest, but had, no relevant skill set beyond my military experience. And so decided to do a joint degree, to do a joint MBA and master's in public policy at Harvard. And literally, I think on the first day that I was there, I met 2 of my co-founders of CrossBoundary, Matt Tilliard, who remains with the firm and was coming out of, had Australian guy who'd worked at BCG and then spent time in Afghanistan working in the development sector there. And Eric Melmstrom, who had been an Army Ranger in Afghanistan. And we were all 3 doing this joint degree program. And we all had this sort of shared interest in private sector development in tough places. And I also think, we're all kind of disillusioned as well from our experiences. Like, we've been part of these really massive top-down interventions, a lot of blood and treasure used up, wasted to some degree, and not necessarily a huge amount to show for it. And interestingly, we all also took this class in our first semester that was with this guy, Rory Stewart. I'm not sure. Have you ever come across Rory Stewart?
Oh, yes. Oh, yes.
So Rory was teaching this seminar, and he had experience in Afghanistan and Iraq as well. And I forget the exact title of the seminar, but it was basically like why interventions fail. Like why do all these grand purposes and noble ideals, you try and go change the world in a positive way, but they fail. And they often fail because, and what we discussed is because, it's just simply too top down. It's too external. It's not localized. You kind of come in with your vision of what you want to impose on the society. How do you want to reorder the society? But the contextual elements on the ground mean that, not only does that your vision not work, but you might actually make it worse. And so, we were in this, seminar with Rory and debating, back and forth these ideas. And we decided to put together a panel on private sector development in conflict zones for the Social Entrepreneurship Conference. So we brought in speakers, including the head of Roshan, which is a telecom company in Afghanistan, a renewable energy company from West Africa, Liberia. And one of the takeaways from that was that there wasn't actually that much sort of literature out there or case studies available on, doing business in really tough places. And so, I kind of had this funny conversation with Rory where I was saying, oh, this is really what I'm interested in, but I feel like I need to go do the classic summer at McKinsey or something like that. He's like, oh, no, you don't need to do that. You should just go do what you're interested in. So me and Eric spent the summer basically traveling around Afghanistan by ourselves, interviewing entrepreneurs and spending a bunch of time, trying to figure out what it was like to actually try and run a business and create jobs and provide basic services in a place in conflict. And I think what we took back from that was look, even in these really tough places that, if you're in the US, you kind of just have this vision of these places of being constantly on fire. The reality is that the violence is often relatively localized and business is still happening. People still respond to economic incentives. And business is still the best way often to provide people with the basic, goods and services that they need. And our other takeaway, from that time in Afghanistan was that investment is a better tool often than simply providing grants, because we could see how grants, there was so much money being dumped into the country at the time. We could see how grants were just really distorting the economies and incentives and creating corruption and rent seeking and new power brokers, whereas investment sort of inherently had more of a discipline to it and accountability. And so we became very interested in basically how do you bring investment into underserved markets, and continued to do consulting on the side. I briefly worked for a private equity firm, but ended up founding CrossBoundary towards the end of 2011 with this mission to bring private capital into underserved markets.
That's a terrific overview. Terrific. You talk about this advisory capacity that CrossBoundary had in terms of trying to bridge, financial capital with the investment opportunities that are in these frontier and fragile states, if you will. But over time, you've kind of expanded from just being that advisory firm to one that also manages investments. What was the rationale behind launching your CrossBoundary Energy and energy access platforms, and why do you operate them as separate platforms under a group umbrella?
And maybe to answer that, it helps tell a little bit of the advisory story from there. So we started it. We were very focused on the most fragile markets. So in 2013, we were working in Iraq, Afghanistan, and South Sudan. And, South Sudan had basically a counter coup situation at the end of December 2013. We basically lost our business there. And we realized, one of the downsides of working in truly fragile markets is they are truly fragile. And it would be probably wise to be slightly more diversified and work in emerging markets as well, places like Kenya or Nigeria. And we had this period, this kind of low period, because, a lot of our projects did take hits. From 2014 to 2015, we felt like we had built a good brand and had a good reputation, but we basically had no money. And just a funny anecdote is we hired a new sort of CFO, COO, and he'd been on the job, I think, a week. And Matt and I were both in Liberia. And he called us up and said, look, I've actually done some careful analysis since I've been here. And I'm quite confident that you guys are not going to survive as a business. So I'm going to save you the trouble. I'm going to save you the trouble of laying me off eventually. And I'm just going to quit right now. We're we of course, being very optimistic entrepreneurs, were like, no, of course, like we're going to be fine. Like you need to stay. Like what can we do to convince you to stay? But he left, and honestly, it was probably good from a cash flow perspective that he did, because we did have a few lean months there. But so now, anyway, so fast forward, now 2021, we got over 100 people, 13 offices, and the majority of that is on the advisory side. So I'd say about 70 or so of the folks are on the advisory side. But yeah, the investment management side, started, all the way back in those tough days. So the genesis of that is really, it's just really the flip side of the same coin. Like, our mission is to bring private capital into underserved markets. We fundamentally see this often as not a capital availability problem, but a pipeline problem. The quality of the bankable deals, which obviously we try to address through advisory, but also sometimes if we feel like sort of the niche is not being served, we set up our own investment vehicle to do that. And in the particular case of CrossBorder Energy, which was our first investment vehicle, and we just exited that vehicle. We closed it back at the end of 2015. That came from being in South Sudan and seeing factories like the SAB Miller brewery there that were running on 5 megawatts of diesel generators at enormous expense in a place with an incredible solar resource, and just thinking, hey, if we could just provide financing for them to switch to solar, it's a really compelling business proposition both for them, and there'd be a good return to be made. And I think the investment vehicles that we've developed play this sort of hybrid role of, they're not pure financiers, they're not pure passive investment vehicles. They have in-house development capacity because we see it as necessary to have bankable opportunities. Like, the problem is not simply the availability of capital, the problem is the quality of the investment opportunities. And so you have to have in-house capacity to build that. And so, yeah, I think, why have both advisory and investment? Again, it's just to serve that mission of bringing private capital into these markets, but also we find the businesses very complementary to each other. Our investment vehicles are very niche focused. And so conflicts of interest have been, we have a rigorous policy around it, and they're relatively easy to manage. And if you think back to kind of the roots of finance, if you look at how a 19th century merchant bank operated, they operated in very much the same way. They had their own skin in the game. And so, we think if you're in these sort of private frontier markets, it makes sense to have both an advisory and an investment capacity.
Yeah, no, that's really interesting. I'd love to pick up on that pipeline issue that you just mentioned, and the question of investable opportunities. One of the bugaboos I have is this gigantic disconnect between the rhetoric about mobilizing trillions for the UN Sustainable Development Goals and the capacity of countries and companies to absorb this volume of capital. So, you're active in these markets. You're there. You're looking at them at the coalface, right? So what is the role that investment facilitation plays in bridging this gap?
Yeah, I mean, I have the same, I guess, pet peeve. I mean, I remember back in the pre-COVID days when we used to go to conferences, speaking on a panel, and somebody says, all this sounds interesting, but I don't understand, how it's scalable. Like, how are you going to mobilize trillions of dollars? And I'm like, when I hear about trillions of dollars, I'm like, what are we even talking about? Like, we're working on the ground in these countries, and like, we struggle to put together, bankable opportunities between $5 and $100 million. I mean, that's the size of the appropriate size of the market opportunity or the transaction often. And I feel like people get, very distracted by, we're just going to help, these two companies, but what about the trillions of dollars needed to transform infrastructure as a whole? And again, to go back to, why interventions fail, like, our philosophy is very much like, start small, start humbly, start local, do what you can, as opposed to saying, hey, we have to fix everything at once or not bother at all. So that's like a little bit of a philosophic point. I think Rory had a good line about, that we can do less than we hope, or less than we pretend that we can do, but we can do more than we fear. And so there's some middle ground between trying to solve everything and simply giving up and not doing anything at all. But to take this to the investment facilitation conversation. So again, like, there's plenty of capital out there, both in the big picture, and even if you just look at like how much dry powder still sits out there in African private equity, for instance, there's a lot of capital out there that's looking for opportunities. And when you go to these countries, particularly the most fragile ones, there are good opportunities on the ground. But what it takes to take an opportunity, say in Mali, and make that sort of just as easy for an investor to look at and invest in as something in South Africa, there's a gap there. There's higher transaction costs. There's information asymmetry challenges. And so we see investment facilitation as basically us as an advisor playing that role of sort of being the missing investment bankers that you need on the ground. But they don't exist in these markets because the markets are too risky, too small, too shallow at this time to support a robust advisory ecosystem. And so we partnered with donors like the U.S. Agency for International Development, where they help support us in operating in a place like Mali. And we actually did this program. We had a 3-year investment facilitation program there. And we were able to bring in $50 million in investments from a bunch of different investors, including private investors based in Europe who had never even been to Mali before. But once they had access to the information and trust that they had an honest broker on the ground, they were able to do those deals. And then the next point, or maybe the last point about this, is just the value of pioneer transactions, the value of getting that first deal done. Because in these markets, there's often a first mover disadvantage. Like it's harder to be the first entrant. You have to figure out, how is the regulatory environment actually being enforced? You have to figure out what price can the market support. You have to figure out how to get your inputs in. And so by helping these pioneer investments enter a market, like you're breaking a path for everyone to come. And that's how you can, get to the billions and trillions of dollars of impact. Paul Collier has a good example of, if you think about like the first textile investment that was probably ever made in Bangladesh, it was, surely a small investment, but it broke the path for what's now become, the biggest generator of exports, the biggest generator of foreign currency, the biggest employer in that country. And, taking it from, I think 6 billion of GDP in the 1970s to, around 200 billion today.
CrossBoundary Energy, which maybe you could describe a little bit about it, but it achieved its exit to Arch Emerging Markets Partners with a 15% net IRR. And that's quite a bit higher than Cambridge Associates Index for African PE and VC funds. So I was wondering, one, if you could tell us a little bit about what that was with CrossBoundary Energy, how it fills this little gap around bridging the gap of financing with the small scale opportunities, and then sort of riff, if you will, on whether private equity is the right model for investing in these markets, or if we need new models or new types of intermediaries.
Yeah, no, I think the latter is a great question. So CrossBoundary Energy, which really now is being driven by Matt Tilliard, one of my co-founders. Peter Jobert was also there in the early days, and continues as the CIO of it today. The idea there was just a bit, a model that was already working in developed markets, which was, how do you provide fully financed solar solutions to business customers in Africa so that, the high upfront cost of solar is not an issue. They can simply sign a contract, a power purchase agreement, that's for 20% less than their current cost of energy, and we take care of the rest. And so that's basically what CrossBorder Energy does. Our clients there are companies like Heineken, Unilever, Coca-Cola, and then a bunch of regional brands that you may have heard of in these countries like Ghana, Kenya, Rwanda, Nigeria, that have high energy costs and are interested in lowering those energy costs, and then also doing it more sustainably and hitting their renewable energy targets as well. And so we finance, megawatt size solar systems for these companies. And so the first vehicle that we raised to do that, which closed in 2015, it was an interesting vehicle. We really had a lot of help getting it off the ground. USAID put in some first loss capital. The Shell Foundation provided some initial capital that helped with our management budget. Again, because you have this challenge, the scale challenge of, the transaction costs are high, but the initial market opportunity is small. And so that initial vehicle, once it became fully invested, we obviously, naturally went looking out for the next sorts of capital. And I think we found in Arch, a very strategically aligned, taking the long view type investor that bought out the initial set of LPs. And now that structure has switched to more of an asset company, development company / model. So you have an asset company, which is the long-term holder of the assets. And then you have our development company, which develops and manages those assets. Now, the reason that we did private equity structure in the first place is because everyone's familiar with it. So it's just the easiest way, I think, to try and raise capital is a GP/LP type structure. And people kind of get it. And you can, we did less carry. We did 15% carry instead of 20% carry. There's just a few variables to play with, but people kind of get the structure. We didn't do it because, if you were to start from first principles, that it's the most sensible structure to finance long-term energy assets in Africa. And I think as the business has evolved, we are becoming more oriented on this, asset company model or less traditional models. And maybe to riff on your question, I mean, the private equity model is surely not optimized for emerging markets. The private equity, classic model is optimized for U.S. leveraged buyouts in the 1990s. And just to pick a couple aspects of the model that really don't necessarily work well, like management fees. Like if you look at the marketing materials of like Blackstone or Apollo or the mega funds, like they actually make most of their revenue now from the management fees, not from the carry, because management fee of 2% on billions and billions of dollars of capital becomes a really large source of income. Whereas you have the opposite problem in these frontier markets, where if you're like a fund in DRC or Mali or Sri Lanka, and the right fund size might be $50 million for that opportunity, and 2% management fee on $50 million might not cover the team that you actually need to thoughtfully deploy and monitor that capital. And so, the mega funds are running a huge surplus for their management fees, whereas in these markets, the smaller funds, struggle to justify or struggle to be able to get from their LPs enough budget to actually run their operation effectively. And obviously, there's challenges with the limited life. I think, deals simply do take longer in some of these markets. And so, the private equity time horizon doesn't necessarily always work. And so that pushes you more towards, how can you be more creative and towards, holding company structures, asset company structures. And I think, those can work. They're just less familiar. And so you have to be, both parties, the LPs or the DFIs who might invest have to be willing to invest that extra effort to understand this new structure and make it work. And then you have to deal with some real challenges around, okay, what is the governance of the vehicle? How do the investors have confidence that there eventually will be some liquidity? But I think there's plenty of room for innovation, both in tweaking the existing private equity model to make it better suited for these markets and new structures.
Tom Barry of Zephyr often points out that, capital market development has not proceeded at the rate at which most investors 20 or 30 years ago expected would happen across emerging and frontier markets. And I wonder, idly, if we need to see more capital market development in, the public markets, if you will, across all these countries, or if it's really a function of private market participants constructing new vehicles or approaches, or using the legacy vehicles and structures that are available.
Yeah, I think it's a little bit of a cop-out answer, but the answer is probably both. All of the above. The challenge on some of the public capital market stuff, which is super necessary and can be foundational, but at the same time, you don't want to build a sophisticated capital market structure when there's not actually that much, quality deal flow to sort of transact on or trade between participants. But you and I have talked before. I think like there's a real need for a secondaries type vehicle in these markets, which could be done in a variety of different ways, including the capital markets type approach, because you've got the problem of zombie funds. You've got, funds that have decent assets, but, are past their life and can't exit those assets. There's not a natural buyer or sort of IPO market for those assets, or they might be subscale. And so, addressing those is one issue. And I think, to your broader point about like the innovation that you see, or the innovation might be a generous word, but what you see in the US markets, right, is like, basically anything goes, and you see probably an over financialization of the system. Whereas I think in these markets, like you see finance as it was originally intended, like finance really accomplishes a genuine public good in these markets. It gives, goods and services to people that they wouldn't otherwise have. But I think it's frustrating that when you do try to be innovative, there's often a lot of initial interest, but when you actually get into the weeds with the development finance institutions or institutional capital that, has the capacity to support and invest in these vehicles, then ultimately they just want to go back to more traditional structures. They want to put their money in the biggest existing funds. They don't want to necessarily back first or second time managers, which I think we need if we're going to, spur a much more developed finance ecosystem.
You've got this footprint up across multiple continents. So what's your philosophy on recruitment, and how do you inculcate a shared culture across disparate geographies?
Yeah, I mean, it's a great question. And it's something that me and Matt and Tom Plahive, who's our other partner, spend probably most of our time thinking about is recruiting, retention, and culture. So I guess in terms of like, what do we look for in recruiting? Like, I think the number one first thing is locus of control. Again, from my Marine Corps experience, but you can get it elsewhere, that feeling that you're responsible for everything that happens or fails to happen. And everything is your fault, not in a sort of disempowering way, but in a taking ownership way. Jocko, the Navy SEAL, has that book, Extreme Ownership, which I think does have that good ethos of you're responsible for finding your own way. And, there's always a bunch of, particularly in these markets, there's always a bunch of excuses and reasons you could tell yourself why the business didn't work out or the investment didn't work out. And you just have to take the view that like, you're going to find the way to make it work and that it's your responsibility. And I think linked to that is like, we are very comfortable, and I think this attracts people to the firm. We are very comfortable giving people a lot of responsibility early. Again, I think about like, I was 23 years old and like the Marine Corps sent me to Iraq with a sniper platoon and said like, you're fully equipped to handle this. But somehow in finance, like there can be an ethos of like, you have to be 30 years old basically before you can take a client meeting on your own, or 40 years old before you can launch a fund. And I'm just like, I mean, no, like you can be young and very good, if not better at this stuff. So locus of control, obviously we look for the mission driven nature and values. Like we want people who are kind, people that you are comfortable being stuck in, a random airport with for not just hours, maybe days, people who are not sarcastic or cynical, but, are always sort of optimistic and willing to persist. I mentioned before, I think the private sector toolkit is critical. Like you do have to do the work. My friend Lauren Cochran at Blue Haven Initiative has a great blog post out there about, hey, if you want to break into impact investing, like you still need that investing toolkit. You can't just have sort of the idea that impact investing is cool. And then the last thing I think is the willingness to do the work. All about like great work-life balance, but like my experience is that, when you're creating new stuff, you have to work really hard at it, at least for, short periods of time. And most people I've found who create great things are working harder than you think and working, quite efficiently. And so being willing to put in the time and the persistence to get the results is, I think, the quality that we look for. And then, at this point, 13 offices, 100 people, like we have so little direct influence on the culture. And so it's really about, it's a talent of the people that we've hired. And it's about, if you have A players, they hire other A players. They like to work with A players. And so that is what replicates the culture. It has very little to do with us at this point.
I like it. Yeah. Your locus of control comment reminds me of a presentation that I saw this old school Marine General, Lieutenant General Paul Van Riper give many years ago. I mean, 20 years ago now, probably, where he spoke about complexity theory and complexity science and the notion of being in command and out of control. And he always referenced this book called Complexity by Mitch Waldrop, which is really an excellent book. But that idea of decentralization, sort of setting an azimuth, right, for people to aim toward, hire motivated people, and then trust them to do the work. I think, and I know, I mean, coming from the Marine Corps, I know Paul Van Riper's work as well. And then, what it reminds me of is also the recent book, No Rules Rules, on the Netflix culture and the idea of just leading by context rather than control. Because even in the Marine Corps, like people think the Marine Corps must be very top down and hierarchical, but it's actually not. It's all about giving the context, giving the overall mission, and then empowering those subordinates to act on it in a decentralized way, recognizing that who's ever actually closest to the fight is going to have probably the best perspective on what needs to be done, versus someone in Washington. Just to go back, so one thing that ties a lot of what we've been talking about together is your recent initiative around open sourcing your approach to financing mini grids. Like on the one hand, you guys got a great return out of that energy fund, and most people in traditional private equity would be like, "Oh, we've got a secret sauce here. Don't tell anyone about it." And then on the other hand, as a firm that it's got its start with investment facilitation and sort of trying to beat a pathway into these markets, you're doing this open source for project financing. So what was the thinking behind embracing this open source approach, and what do you want to see happen from it?
Yeah. So our second investment vehicle is CrossBoundary Energy Access, which is basically similar to the first vehicle, but focused on project finance for rural mini grids for communities typically that have never had electricity before. And I say, unlike the sort of commercial and industrial segment, this segment is quite challenging from a return perspective. And so you need to have blended finance to make it work. And in our first vehicle, Rockefeller Foundation's played a really important role in providing essentially a semi-concessional tranche of money to make that whole vehicle work. And so I think as we were, in trying to build this project finance approach for rural mini grids, like we went through a lot of angst, as and in particular Gabriel Davies, who leads that vehicle, and Sebastian Deschler, our general counsel, like a lot of angst on the legal structure. And I think we did have that moment where it's like, gee, this is some valuable intellectual property that we have now, but we feel like we're all on the same team, all of us, other investors, other mini grid developers. The market opportunity is so massive, 600 million people without electricity in Africa, at least 100 million of them best served by, these types of mini grids. So it's not really a competitive question. And we felt like if we sort of just gave away our templates and our legal templates and our financial models, it would be good for the sector as a whole, and it would probably be good for us too. And so it was, both a good thing to do or the right thing to do, but also hopefully a commercially smart thing to do. I think, and our team is motivated by it. Our team is a mission-driven team. And so it's not just about like, how can you eke out a little bit, more basis points out of the transaction. It's like, how many chances do you have to say that you helped bring electricity to someone for the first time? And being part of that is what's exciting.
That's awesome. Yeah. It also seems like over time, you're providing the enabling infrastructure for so much more development to take place, so much more investment to take place, right? So many more new business models to be created once you start connecting more people to the grid, or the mini grid in this case, but giving them energy and then providing new services over the top. So it's really exciting, and I'm hoping that all of our listeners will be keen to see how this grows and develops, and hopefully participate in some way, shape, or form.
Yeah, just a quick note on that, because we have this mini grid innovation lab that basically runs, and it's also supported by the Rockefeller Foundation and DFID, the UK Development Agency, and it basically runs all these trials on exactly that. Like, how do you layer additional services on mini grids? How do you make the business proposition of investing in them more economic? And so we published all this research on like appliance financing and how financing appliances alongside that first connection can help that customer get more out of the connection, but also the investor see a return more quickly. And interestingly, this has all been focused in Africa, but we've heard from other firms that have looked at the research in Southeast Asia and Latin America that the trends all line up. And so if people are interested in that, I'd say go to the website and download it.
Awesome. We'll be sure to add some links in the show notes so that people can go learn more about this stuff. You talked about some of the research and reports that sort of got you guys started way back at Harvard, and this seems to be part of the pedigree, right? So one of the values, at least as an outsider, is research and going out and having sort of a data-driven, empirical-based approach to investing in development. And if I'm not mistaken, you released a report last year with the Tony Blair Institute for Global Change on this topic of investing for development. What was the impetus for that report, and why should investors or entrepreneurs or broader stakeholders take note of it and its findings?
Yeah. So I think, it came from a similar place as the investment facilitation sort of theory. And we've written a report on that as well. And it came out of, conversations that we had with Tony Blair and Jonathan Said, who's one of his top people. And we were, talking about this, and they do a lot of work in Africa and other markets, basically advising governments and helping governments reform, helping governments attract more private sector investment. And they were also lamenting this fact, which is like, people always say, oh, trillions of dollars of investment is needed. But then if you actually bring investors there, there's not bankable deals, or the government might, show them, deals that are really not deals, they're just ideas. And so the investors, go back home and nothing ever happens. And so there's this need for facilitation, for essentially investment banking type support on the ground. And the idea of the paper was, well, there's a couple ideas, but one idea was that there's a need for this twin track facilitation, that you need to have, help in terms of sort of the investment banking type services on the ground, but you also need to have the government actively facilitating investments and being articulate about, what is their sort of sector strategy, what are the reasons and incentives to come invest. And you need a feedback loop between specific transactions, which often run into, policy barriers, regulatory barriers, and enabling environment improvements. Because I think often the challenge on the enabling environment stuff is like, people go in and they write like a long white paper and say, here's everything that's wrong with all of your laws, and like, here's how you should improve, to have a better enabling environment. And it just seems a bit massive and also hypothetical, which is different than going in and saying, look, we know that you want to be able to provide, quality electricity to your people. And like, here are the very specific things that are holding up the specific investor who's ready to invest $50 million in this project or sector if it can be removed. And so you can have a much more tangible policy discussion, and then you have a great demonstration effect, ideally, when, if that policy barrier is removed, the investment's enabled. That was, I think, one sort of main thrust of the paper. The other thrust of the paper was just this desire to like try and CrossBoundary itself, the name comes from this idea of like helping people across geographies and across public, private sector, philanthropic work with each other. Is you have like a lot of people operating in silos in these markets. So you have like the big donors coming in and saying, we want to focus on X, value chain from a purely developmental perspective. And then you have DFIs or investors coming in that are often, just purely transactional, like, where's the best deal? And then you have the government, which might have its own sort of economic development strategy, which is not coordinated with either of those parties. And then you have like what actually makes the most sense from a comparative advantage perspective for the country to pursue. And obviously, like saying like, oh, coordinate more, plan more, like that can definitely be a buzzword and a dead end. But I think, what we want to do is make sure that there's at least, some loose coordination, so that donors don't say, oh, here's a $50 million program to improve, the sorghum value chain in X country. And, another investor comes in and says, well, we have no interest in sorghum, but we actually would have invested in a different agriculture value chain, but we can't get any support there. And so trying to break down the silos basically between governments, donors, and the DFI investor transactional space.
Excellent. Out of curiosity, we talk a lot about international participants coming into these frontier markets and, doing what they can to help invest, develop, et cetera. What's the role of local capital in all of this? So whether that's local pensions, other savings vehicles, or local, high net worth investors.
Yeah, I mean, I think it's huge. It's hugely important, and it's it should be the future, right? And there's different types of that capital. So you have, in some of these countries, there is, the beginnings of a venture capital ecosystem, and hopefully you see, individuals who have had successful companies, willing to take that money and invest it, as an angel in seed stage companies in their own country, because that's what has, spurred a lot of the innovation in the U.S. is founders basically investing in other founders. And so that's, more on the sort of maybe informal and individual side of things. On the other side of things, you have the institutional capital. So, the local pension funds, the local insurance companies that sit on a lot of capital, and how do you make it attractive for them to invest locally, particularly because it can help overcome the currency challenges, because they're
Yes.
obviously investing in the same currency. And so we've been working with a group called Media Advisors on, and also in conjunction with USAID on a number of initiatives to try and basically stimulate these local capital ecosystems and essentially form consortium, as has been done now in Kenya and South Africa, between these different pensions and insurance companies. And again, you have the same transaction cost challenge, which is, those firms are not set up to be able to diligence individual deals in their country, and put together bankable projects. And so how do you then again serve up projects to them in a way that's really palatable and easy to digest and aligned with their risk profile? So they obviously are not in a position to be investing in seed stage companies, but they can be a great exit for a completed infrastructure project where the cash flows are now steady and reliable, and that initial investor can sell to the pensions, and hopefully redirect that capital to the next venture.
Yeah, no, I think this is probably the most underappreciated global theme is the rise of local capital and how that could transform the global investing landscape over the next, call it 2 decades, in our lifetimes. And I'm very excited about what it all means. All right, one more question before I hit you with some somewhat rapid fire questions at the end. But CrossBoundary's been focused on the frontier since inception, right? And you've been pushing the boundaries, opening up new markets. What's the next frontier, and what's next for the CrossBoundary group?
Yeah, I mean, so. A few things. I mean, we've been mostly focused to date in, I think, Sub-Saharan Africa, Central Asia, Middle East, and we've recently expanded. So we now have an office in Bangkok, we have an office in Bogota, we have an office in Eastern Europe, and so we want to be present in all of the frontier markets. We also just formed a partnership with Brown Advisory, which is a large U.S.-based institutional asset manager, over $100 billion in assets. And one thing that I think is kind of cool about that partnership is Brown Advisory is basically a descendant of Alex Brown, which was the first U.S. Investment bank established in the early 1800s. And so there's this sort of nice line of history where now all these other markets are considered the frontier, but we don't think they will be considered the frontier for too much longer. And there's a lot of opportunities there. And so I think, whether it's through the advisory side or through the investment management side, we just want to continue to deliver on that mission of bringing private capital into these underserved markets. And I think, there's a few exciting trends. I think like the next generation globally, but also people inheriting wealth, like the next generation is much more interested in the sustainability of what they're investing in, the impact of what they're investing in. They want to be thoughtful about their capital. And so that creates an opportunity to direct that capital to impactful investments. And of course, the world is, ever more interconnected. And I think people realize that, how, someone lives somewhere far away can have a bearing in how they live. And, the opportunities to be part of, not just ideas and capital flowing into sort of developing markets, but ideas and capital flowing back the other way is pretty exciting.
Yeah, 100%. All right. Some closing questions to stump you. All right. The first one: who has had an enduring influence on you?
Ooh, that's a good question. So, I mean, I think because there's the obvious answer is probably often your parents, and I think that's true for me as well. But just to put maybe a specific nuance on it. So, I think like sort of my first. The platoon commander that I had when I joined the Marine Corps, and I went through the 6-month basic officers course, had a big influence on me in terms of imparting like the weight of the responsibility that you could have as a 22-year-old, as a second lieutenant, and the consequences for not taking it seriously. And I just remember, very early on, him sitting me down and saying, you will be responsible for everything that your platoon does or fails to do. And if, regardless of what happens, if it fails, like the blood will be on your hands if you did not prepare it well enough. And so I think in that period, I really did buckle down a lot more and take things a bit more seriously than perhaps I had before. And I think that sort of that sense of being mission driven, of having to do the work, has hopefully, led to some of what we've been able to accomplish later.
Great answer. All right. What is the best thing you've read in the last year? And we're going to set anything by Rory Stewart to the side.
Yeah. So he's got some good stuff out there. I'll tell you what I just finished, which I like, is Missionaries by Phil Clay. If you've come across it. So
yeah, I haven't read that one, but I read his first book.
Yeah. So his first book, Redeployment's also excellent. I think Missionaries is maybe even better. And so Phil Clay is a fellow Marine, also served in Iraq. He's a friend, and he's written just this really excellent novel about kind of the sweep of modern warfare. Focused both in the Middle East and in Colombia, and gets at a lot of these themes that we've been talking about, like sort of the noble ideals that might lead you to go to war, and how it plays out in reality. And how there can also be hope and redemption. So I just finished that one over the holidays, and I really recommend it.
Adding it to the queue. All right. Where's your favorite place to travel?
I mean, I have so many. I mean, I really do love both South Africa and Kenya. I recently had the opportunity to travel to Greenland, which I'd never been to before, and it's just an unbelievable, spectacular place. So for me, I think it's always the next place is my favorite place to travel.
Okay. The next place. I like it. Well, hopefully the next place will come soon. Once this COVID nightmare is behind us. All right. And then one closing question. What advice would you give to a young person who is keen to build a career either as an investor or an entrepreneur in the markets where you guys are active?
I think, do it. Number one, like, don't feel like it's out of your reach, or you have to pay your dues somewhere else for 10 years before you can afford to go do it. I think, do it as soon as you can, with the only qualifier that, make sure you develop that private sector toolkit first, that you test yourself, and that you've, learned, all the essentials of running a business, or the basics of private sector work, before, you just sort of go off with purely the noble ideals, because you need both. You need the rigor of the toolkit, and you need the noble ideals to be successful. And then you just need to be a bit persistent. But I mean, there's never been a better time, I think, and more opportunities to be able to work in these markets in an entrepreneurial way.
Well, Jake, this has been awesome. Thanks for coming on the show. And I'm looking forward to keeping in touch.
Yeah, thank you. Thanks for having me.
Hey, everyone. This is Mike again. Thank you for listening. I hope you found the conversation edifying. And if you have any feedback, good or bad, please send me an email at mike@porticoadvisors.com. If you like this episode, please share it with a friend, colleague, or your connections on social media. Or, if you feel like it, leave us a review on your podcast player of choice. If you're keen to learn more about private markets developments across the emerging markets, then go ahead and smash the subscribe button, and please visit our website, porticoadvisors.com. That's porticoadvisers.com, where you can peruse through our research and newsletter archives and sign up for our monthly-ish newsletter. Ciao for now. The discussion in this podcast is for informational purposes only. Neither Portico Advisors LLC nor its guests plan to update this material, and the opinions and conclusions mentioned may change without notice. Neither Portico Advisors LLC nor its guests make any warranty that the information in this podcast is error-free, omission-free, complete, accurate, or reliable. Nothing contained in this podcast should be construed as legal, tax, securities, or investment advice.